It's about that time of day again. My name is Joseph. Tuesday evening, March the 27th. Welcome back to your nightly newsletter. My plan this evening is to identify the most reliable trading opportunities setting up for Wednesday's session. And I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bearish with a big spike in channel pattern, but it's really the measured move on the chart that tells me exactly where to be looking for selling opportunities on Wednesday morning. The S&P is bearish, and this trend reversal from Monday tells me to look for selling opportunities using a hidden channel strategy tomorrow morning. Nasdaq is also bearish with a very strong move lower. That tells me to look for selling opportunities with a two-legged pullback up at some levels of resistance tomorrow morning. And of course, gold is range bound all the way at the lows of the range. And I've got my eyes on a pendulum swing strategy for the best buying opportunities, yes, buying opportunities on Wednesday morning for gold. Wrapping up tonight on the euro is bearish with a big old flag pattern, and the two-try rule is what's telling me that sellers really only have one option before they lose control for a possible bull run on Wednesday morning. Boy, I have a great video newsletter for you guys and gals tonight. We get some strong trends. We got some trading ranges, we got some flags, and some two-try rules. I'm going to jam-pack this video with lots of learning and hopefully earning opportunities. But before we jump in and put the plan together for Wednesday's session, I need to remind you, if you're over on YouTube, if you're watching this video on YouTube tonight, you can find a detailed description of this entire strategy written out in text on my blog at sidewaysmarkets.com. I'll put the link in the description of the YouTube video. Also, if you're on YouTube, if you have any questions, any comments, any concerns about anything covered in this video, please remember to post that in the comment section below. And if you like what you see, please help support this channel by subscribing to our channel and make sure you hit the bell icon so you get notified every time I post another video. And if you really want to stay in tune with everything we do here at School of Trade, don't forget to head over to the Sideways Markets blog. This is where all the action happens, and make sure you join our mailing list. All I need is your name and your email address, and I'll shoot you an email anytime something new happens here at School of Trade. While you're here, don't forget, join my social media feeds, lower left-hand corner. I'm always posting exclusive content. You won't find it anywhere else on any of the other sites we use here at School of Trade. I'm always posting important charts, links, and updates throughout the week on StockTwits, Twitter, Facebook, and LinkedIn, so follow me there in the lower left-hand corner. Speaking of charts, how easy is this? All the charts from tonight's video, have them ready on your computer for tomorrow. Just follow that link where it says click here to download today's charts and be ready for tomorrow's session. Speaking of tomorrow's session, how about a free pass? Come out and join me as a guest in the trade room this week. If you're not a member here at School of Trade, come out and learn all about my trading strategy by grabbing that free pass and joining me in the trade room. And if you have any questions, again, you can post those questions below the video on YouTube, or if you're here on the website at Sideways Markets or on our homepage at schooloftrade.com, there's always going to be an option for live support. Just follow that link, right, and send me your questions there. I look forward to helping you guys out every step of the way. All right, big day tomorrow. Tomorrow's a Wednesday, middle of the last week of the month. Now, we've been talking about this pretty much all week this week, and that is we have the end of the month coming right around the corner. The problem is the end of the month is a Friday. It's a holiday, right? You'll notice, right, it's empty, right? This is the Good Friday holiday on Friday. Markets are closed. This is the Friday before Easter weekend. It's a big weekend here in the United States, right? It's one of the more popular holidays right around the country. And of course, they give us the day off on Friday just to sweeten the deal. Well, for traders, this is concerning because we look at the end of the month. Now, I'm a day trader. I assume most of you guys are day traders, so we don't really deal with this. But remember, we're a very small fish in a very, very big sea. And for the most part, right, there are a lot bigger fish out there than us. And those big fish have to be very concerned about as we go into the end of the month. For example, if you're managing client money, right, you got to make sure your books are in order before the end of the month because your clients can want to know, right, what your performance was month over month, right? So as you get closer to the end of the month, traders start getting out of losing positions to cut their losses early. They start getting out of winning positions to try to kind of pad their numbers as they go into the end of the month. So as we start seeing the end of the month, the bigger lot traders out there, the longer term traders, the traders who are managing other people's capital, they have a job to do before the end of this month. And when you look at that Friday and the markets are closed, they can't do their job on Friday. So what this means for you is the next 2 days are probably going to be quite volatile. Traders getting in, traders getting out, manipulating their numbers as we go into the end of the month with the goal of making whoever's money they're trading for, making them look better on paper. So we're expecting to see some increased volatility as we go into the end of the month, basically just because end of the month we always expect to see more volatility because of that, but because of that Friday, right, we're missing that Friday session. And again, if you're just joining us this week, yes, Friday is markets are closed. In fact, you can see here, there's even an early close scheduled on Thursday afternoon. We'll worry about that in tomorrow night's newsletter. For tomorrow, though, expect to see a little bit of an uptick in volatility, right? This is unexpected volatility, right? This is not easy does it volatile markets. We'll continue to see some choppy, some sloppy price action most likely as we go into the end of the month. Now that we know we have that, what do we have for news tomorrow? Well, tomorrow we have quite a bit of big news starting right out at 8:30 Eastern time. GDP and the international trade number both are due out tomorrow morning at 8:30. You can almost guarantee that's going to move the needle a little bit tomorrow for most of us trading all the different markets, no matter what market you're trading. Later on in the morning, we do have a minor report here at 10 a.m. from our pending home sales number. Home sales numbers are racing higher here right now. So I would imagine tomorrow morning at 10 o'clock Eastern time, you should see a movement of that market, you should see the needle move a little bit tomorrow morning at 10 o'clock, even though it's only a Green Star news report. That news number should be something that to pay attention to tomorrow morning. And then last but not least, this will only apply to oil traders, obviously, but we have the inventory number tomorrow. That weekly inventory number is at 10:30 Eastern time. If you're with me tomorrow trading crude in the trade room, right, don't forget my cutoff is always 10:15 on Wednesdays for oil trading, right? And really in all reality, anything after 10 a.m. Eastern time on a Wednesday morning is going to be seen as lower probability. I'm not going to say you can't make money trading around inventories, but it's unreliable money. It's, I don't want to say foolish money, but it's extremely risky money. It's difficult to make consistent profit around news. I can get lucky here and there around news, but it's just really difficult to do that and be lucky every week around that inventory report. So if you want my advice, I would advise there's so many other markets, there's so many other times during the day, times during the week to be trading. I would advise to stay away from that inventory report at 10:30. If you disagree with me on that, I wish you luck. My experience with trading news has not been very successful over the years. Again, I make money once and then give it back and then make money again and give it back. It seems like the losses will usually be a little bit bigger, right, than those wins. So just my personal opinion there on oil for tomorrow morning. So 8:30 GDP international trade, pending home sales number at 10. And again, if you're trading crude oil, right, the petroleum status report, that weekly report at 10:30 Eastern time tomorrow. And, again, I'll repeat this again. We are expecting to see some increased volatility as we go into the last few drops of the month of March. We got the end of the first quarter right around the corner. There's a lot of people, we assume, who are making some really tough decisions as they go into the end of the month. All right. Got that out of the way? Let's hit some charts. We got crude oil, S&P, Nasdaq, gold, and euro. Roll up those sleeves. Let's get ready for tomorrow. Crude is clearly bearish with a spike in channel ahead of tomorrow's weekly inventory report. The bears look really strong into the closing bell this evening. You'll notice we're pretty much right on the daily low here. But this measured move is most likely going to cause some major profit taking from the bears, which should give me the opportunity to use this spike in channel for selling opportunities up off the highs tomorrow morning. And again, remember, the weekly inventory report is released at 10:30 Eastern time tomorrow, so anything after 10 a.m. is lower probability. So get to your desk early, right? Pack a lunch, and if you plan on trading, right, the black gold, get to those trades as early as you can, right, tomorrow morning. Pretty easy to see here now. If you recall, this was a range, right, coming out of yesterday's session. So we went up and then swung back down. Now I want to talk about this briefly because this is a pendulum swing here on oil. I want to talk about this because we talked about this in the trade room this morning. We were expecting oil to make another leg lower to finish off that pendulum swing. So there is a chance, especially with inventories coming tomorrow, there is a chance, and again, if you watched last night's newsletter, you knew we were looking to sell this high, right, and back down again. That was the plan from last night's newsletter. So the pendulum swing is in full steam ahead. The problem is that this is a really, really strong move down, and it's difficult to think this market right now, without a little help from the news report tomorrow, isn't going to continue that move down to Friday's low. So with the potential of this being a pendulum swing, I will leave that open-ended for a possible bull run. But we're going to have to see the bulls take control of this before I want anything to do with being a buy side, right, on this market. So again, just kind of addressing that from last night's newsletter, this could easily be a pendulum swing. Right, we had that bear move down, right? This could easily be pendulum swing up, pendulum swing down. You'll see an example of this on gold, but this is a very deliberate two-legged move down, very, very strong. So I'm just not in the habit of trying to be a buyer, right, into a very strong move unless there's something else that I can use here, right? We'll talk about some compensating factors on that when you see gold. When you see gold in a few moments, you'll see what I'm talking about, right? So big, strong move down. If you're thinking pendulum swing right now, I totally agree with you on the pendulum swing, but the momentum in this market is just too strong to ignore. I can't think about being a buyer in this market until we get some bullish momentum going higher. Now, with that said, strong move down, new lower low. I'm going to connect these dots at these lows. I'm going to bring it right back up to that high. This could be maybe a little bit higher, maybe a little bit lower, but I think that's a good-looking spike and channel that gives me some selling opportunities up off the high of that spike and channel. Next thing here, you can see big, strong, one leg lower. Anytime we see a strong move down, we expect a two-legged correction and another leg lower. They got their measured move. You can see they literally tapped it to the tick here at 64.53. Anytime we have a measured move being reached, we typically get a bounce and a retest of that measured move, and we'll look for those selling opportunities after we get that bounce. At the same time, I'm also looking at this low from Friday, right? If we look back in time, this is the very beginning of Friday's session, and this kind of bounce off of last Thursday's low or last Friday's low, whatever you want to call it, right? I would expect that to be a big target here for us going lower. If we do keep going lower, I'm going to have to be aware of that low sneaking up on me and focus on traps, right? So I'm not selling too low, right, as we go lower. So the plan's pretty simple. We have a spike in channel. The spike in channel tells me sell off the high. We have a measured move, right? The measured move tells me look for the bounce and back down we go, right? Friday's low, yeah, that tells me we're probably hunting for Friday's low. I just got to make sure I don't get too greedy down here, right, and try to sell too close to Friday's low. So we know the bears have control. Let's play that game. What if price goes up? What if price goes down? What if price goes sideways? If price goes higher here, I'm looking for selling opportunities off of the high of this channel. I'll look for a buyer failure, right? It's the letter M, into some strength going lower and then a pullback, right, to finish off the job going back down to retest that low, right? Imagine for a moment we see a strong move higher back up to the top of that channel. The buyers, of course, they confuse this for a bull reversal. The buyers try to buy the pullback. If they fail, we know their stops are, and we'll start selling into those stops. At the same time, when buyers get stopped out going against the trend, usually that produces a nice strong move down. That strength back below the moving average now gives all the trend followers the confidence they need to jump in off of that moving average, and that'll be an easy sell going back down. You can see something similar to what I've described right here. Strong move up, we pull back, up, right, and then of course failure, pull back down, right? So that pattern, up, buyers fail into strength, strength pulls back, and we finish off that move back down again, right? That's very similar to what we'll be looking for tomorrow at the top of that channel. What if price goes sideways here? What if we end up and back down? What if we do that without getting up into that level of resistance, right? What if we come in tomorrow and we're seeing a double bottom here now? This would create a trading range. So if you see a double bottom at this low and we bounce off of that low, that creates a trading range. Now I know I want to be a seller up off of that high. So if we do end up going sideways, and we always look for a double bottom in a bear market to confirm a sideways range. If we get that double bottom, look for that jump back up above the prior swing, and then look for the sell back down. If the price continues to grind lower, I won't be too surprised. Tomorrow is an inventory day, which means the market does tend to do things it wouldn't normally do, right? But the bottom line is, if we do keep going lower, my goal now will be to try to use this hidden channel, right, for a combination of a trap high, right, and some sort of additional level of resistance to give me a chance to sell off of that resistance. The reality is we kind of know where they're trying to go. They're trying to go down to Friday's low, that last week low, and so with that, right, knowing that, I don't want to sell too close to that low. There won't be as much profit potential there, and without a lot of profit potential, you're not going to have a very exciting opportunity for more sellers, and so there won't be a very reliable trade. You want to look for that chance to sell up off those highs, find a level of resistance, sell at resistance, rather than trying to sell at support. Now, I mentioned earlier the potential of a pendulum swing, and so many of you might be thinking, well, what does the buy side look like tomorrow? The buy side tomorrow looks like it always will when the market is bearish, right? You got to wait for more proof. We have to see a real strong move higher, right? That's the first thing, and then hold the pullback and run from there. We need to see these buyers making some strong higher highs there. That way, that will give us the confidence we need to grab this as a new bull channel, connect it as like a spiking channel or a hidden channel, right? And then look for those buying opportunities coming off the low of that channel. The target at that point is pretty easy. Target's going back up to retest that 66.40 area where we came from earlier in today's session. Again, don't forget, tomorrow is inventory day, so get to it early. Anything after 10 o'clock is considered lower probability. How about some S&P? S&P is bearish and hunting for last Friday's low, but it looks like the triple down support level is holding for the moment, so I'm going to use a hidden channel and the battle zone for selling opportunities going back down to Friday's low. If price keeps grinding lower, I don't want to chase the move down. My focus will be staying patient and looking for traps up above those prior swings. So as we try to go lower here, right? Remember we had that bull market from yesterday, right? Buyers failed to retest the high and of course collapse back down. Anytime we have a trend reversal, we usually can't draw the channel off the high, right? That channel's not going to work very well if you draw it off the high. The most reliable way to draw a channel when the market reverses is to look for off of the lows, right? Off those lows, pin it up to that high, and that gives me now a good spot to sell, right, using that kind of hidden level of resistance. At the same time, right, you'll notice there really isn't an easy measured move, right? None of these legs are really symmetrical, so we have to assume that that move going higher, right, that bounce, double down, triple down, and quadruple down, and it looks like they found a nice happy place there, right at that triple down, with a long-term goal of the quadruple down at that 25.70 2.75. And of course, as always, right, we got that Friday low, right? They finished up that week last Friday right at those lows. And so just like on oil, we assume that's going to be a big target for the bears tomorrow morning. So we definitely can see where the bears want to go. We have a big, strong move down. We know our sellers are definitely in control. Now we need to find some levels of resistance that we can use to sell. Again, we always want to try to sell at resistance rather than selling at support. This is where our hidden channel comes in. I want to sell off the high of that hidden channel, right? This double down, which was prior support, can be used as resistance. And of course, you combine that with really the last prior swing, and that creates the battle zone. Now, I was tempted to make the battle zone a little bit lower, right, off of that reversal line. But in all reality, what I really want is to get up to the high of that channel. So channel is definitely going to be a big part of this strategy for tomorrow. Anytime we see a strong move down, we expect to see a two-legged pullback, and we'll look for selling opportunities coming off that level of resistance. Now, this is just like we saw before, right, as the market turned bearish. We saw the buyers try to hold above the moving average. They failed into strength, strength into pullback, and ran lower. This is a very similar situation to what I'm looking for down around that low, right, or down around the high of that channel. Up into the high of that channel, let the moving average come over. Buyers now try to reverse the trend off of the moving average, and for all I know, they'll be successful. But the odds really aren't on their side. I'm looking for that failure. Sorry about that. Looking for the failure here off of the moving average. Failure into strength, strength into pullback, right? And then finish off that move going lower, right? So again, it's very similar to the same thing we saw, right, earlier on in the session, which ultimately caused, right, this big reversal down. So that's the plan if price goes higher here up into that channel high tomorrow. What if we end up sinking back down to the low and then we bounce off the low? Well, then this becomes a trading range. Anytime we see a double bottom at the low of a bear market, we know we now have at least a trading range, right? Maybe at most, right, a possible trend reversal. In the meantime, though, I want to go up, look for that failure, and back down we go from there, right? So if we do end up going sideways tomorrow, in other words, if we do see a double bottom at the lows and any part of the process going lower, we then know we're not going to want to sell into that double bottom. We want to sell high up above that prior swing, using it as a trading range. The next thing obviously would be, what if we keep going lower? If this thing just takes off the downside here and we keep going lower right now without coming back to those levels of resistance, right, keep an eye out for those traps, right, and try to use, right, again, really at this point now, any opportunity here, for example, maybe a hidden channel there, right, to use off of that level of resistance. Again, so I'm trying to focus on selling at resistance. So even if the market goes lower, right, I don't just throw out the entire strategy. I still wait for that pullback and wait to sell up at resistance. And with such a strong move down, we know there are probably going to be quite a few sellers who are patiently waiting up around those obvious levels of resistance, right, for that move going back down to that low. Obviously, be aware of Friday's low. If we do get stuck down here in a trading range, don't force it. Get up and sell back down. That takes care of that pretty easily there. Now, how do we reverse? Reversals are definitely possible. I'm not sure you've been paying attention the past few weeks, but these markets love to reverse right now. I definitely am not envious of anybody having to manage positions for an overnight session, because we're seeing such dramatic turns in direction on this. We always need to see some strength, a pullback to the moving average, right, and a strong move, right, going higher. If these buyers want to take control, they need to see just as the sellers did, right? Strong move down, hold the pullback and run. If the buyers want it, show me you want it. Because if you don't show us, right, we're going to keep on selling right back down to retest that low. So again, hold that pullback, nice strong move higher, bingo. I'm not trying to predict the reversal. Predicting reversals, there's a fool's game. My job, right, is to wait for the reversal and trade the reliable patterns, right? Not the fast money patterns, right? Because those are difficult to do consistently over a long period of time. I want the slow, reliable, right, paycheck every day, and that comes, right, that comes from those reliable trading opportunities going with the trend, right? So I know a lot of traders out there on YouTube these days like calling reversals, but the reality is predicting reversals is only about a 25 to 35% probability. I'd much rather be up in the 75 to 80% probability, right, that you'll get by following the rules of a trend following strategy. It really comes down to choice, right? What's more important to you, right? Do you want dependable profit each day, right? Or do you want to get lucky 1.5 times per week? You know, I find in my personal experience, it's a lot easier to trade successfully when you're consistently taking profit, right? If you got to take 1, 2, 3, 4, 5 consecutive losses before you get the winner, you know, because that's what, you know, trend reversal strategies do. They use small amount of risk and big amounts of reward because they know they've got a 30% winning ratio at best. And so it's difficult psychologically to stick with that strategy if you're trying to pick tops and bottoms, right? That slow, steady paycheck strategy, that's right. That's what I would rather have, right? And of course, to do that, we want to make sure we trade in the control, right, with the control of the market. All right, so we got the plan there for the S&P. Nasdaq is relatively similar, but you'll notice the Nasdaq is already down at Friday's low, right? S&P hasn't got there, right? Nasdaq's a go-getter. Meanwhile, the S&P is a little bit of a slouch here this week, right? We saw the same thing in last night's newsletter. So Nasdaq is obviously bearish. We're sitting right on last Friday's low after the bottom fell out of this market shortly after the lunch session began this afternoon. The bears have control, but it looks like they found some serious support at Friday's low. So the next step is to find levels of resistance for selling opportunities tomorrow morning. You know, as I always remind you guys, anytime price makes a strong move in one direction, my plan is then to look for selling opportunities after a two-legged pullback. And I have my eye on the top of this channel along with the battle zone waiting here overhead. You'll notice we had that another one of those, right, buyer failures, strength into pullback, and that run lower. And this is pretty much the same strategy we have on the S&P. We had a bull market that turned bearish. You're not going to be able to draw that channel, right, off those highs. It doesn't fit, right? It won't work that way. So we have to draw them off the low, right? I know it seems drastic, but this is where professionals are going to line up those highs, and you can already see you've got a good spot right there for it. So that gives me a chance to sell off of that high. At the same time, anytime we see such a strong move down, I'm always looking for that one leg, two leg, trap high, and back down again, right? So that trap creates the battle zone, right? And then if we really get crazy, we got that falling resistance trend line here. I don't think that's going to be too useful for us because we'll probably end up being a bull market if we get up to that trend line. We may end up seeing it go up and then fail back down, so it may be a bit of a roller coaster ride, right? Going up and then stalling out and then back down to sell it again. That would happen obviously middle to late morning, right, tomorrow morning. So we got a couple things here we're looking at right now. Was there a level down below here? No, that's right. This is Friday's low. Yeah, that's right. This is the low, right? See the S&P. The S&P is more room to go there. The Nasdaq's already there right now, right? So really, really good example there of where the Nasdaq clearly leading the way here, right? It's block and cover here for the S&P. So I want to sell off the high of this channel, right? What if we go up? What if we go down? What if we go sideways? You know, and again, think of that same basic principle, right? Up, buyers try to buy the pullback, they fail, but now it becomes really difficult to sell down here, doesn't it? Right? So this is usually a very big clue here, right? If there isn't a lot of room to sell, you're probably going to get a little bit of a steeper pullback. So don't be surprised here if we see something like this, right? A nice big two-legged pullback, right? Moving average comes over, then the buyers try to buy, right? They fail, and of course that strength into a pullback and then back down. Does that make sense? Right? So if we don't get very far up on this chart, if we don't open up some free space below us, it's going to be difficult to rally the troops. You know, think about it. The best selling opportunities come at a level of resistance where there's a big open space for a big target, right? So if I have a market go up and then collapse back down, support's right here, right? There's your Friday's low right there. That's a lot less, that's not as desirable as a trade that goes way up, right, and then comes back down, right? That's going to be a whole lot more desirable because look at how much more space we have, right? There's so much more open space there. So when you see a market kind of sitting here at this major level of support, you got to be thinking, you know what, where can I find a spot where's a level of resistance that can give me a wide open space below? And that's where I like this trap. That's where I like this trend line, right? That's where I like these prior levels of resistance. Now, in all reality, I'm going to have to respect this trend line coming off that high because you'll probably see some serious sellers coming in at that area, right? But just be careful getting in too low here, right? Depending on where it goes. You know, you're good right there, right? You're good right there getting in off that low, but you can't really trust that pullback, right? You can't really trust that one. So we'd have to wait for it to go through and then continue, right? Use that prior level of support as resistance and keep selling short from there, right? So if we don't get much of a pullback here, just be aware, get it up, be careful going into that low. Again, what I'd rather see is get that nice bounce, looks like it's going to turn bullish, fails at the moving average, right, and then comes collapsing back down. Okay. Now, what if we do just kind of grind back lower here and then bounce, right? This could easily become a trading range, right? Couldn't it? Yeah, absolutely. This could easily be a trading range off of that low, right on top of Friday's low. If that's the case now, you see double bottoms at that low, now you know, let's get up, failure, and back down again. Maybe we get a chance to get lucky and catch some of this level of resistance. It really doesn't matter. I just want to see buyers failing above the top of that range to bring it back down again. And then again, like I mentioned earlier, what if price goes lower here? If price goes lower, right, price goes lower here, we got to start thinking about using that prior low as resistance, right, for our sell back down again. And again, continuing here to try to use this trend line as best we can because there will still be sellers looking to sell into that trend line, right, as major resistance going lower here for tomorrow. How do we turn bullish? How do we turn bullish? Got a good plan here on the Nasdaq. Again, strong move up, pull back to the moving average, right, and strong move higher, right? So really the key is going to be, can we push through that falling resistance? In all reality, we should be able to. If the buyers really take this and we have some good strength, that trend line should be like, what trend line? You know what I mean? It shouldn't even make a dent, right, in the candlesticks. So it'll blow right through it. If it blows right through it, then we can use that trend line as support along with that channel low as well, right? And obviously the target now is all the way back up to that 68.50 area. Now, backing this up a little bit though, right? Backing this up a little bit, if we do get a strong move up, pull back and strength going higher, but we stall out, right, at these highs. This is where you have to know the difference between a bull and a bear market. At this point, it will, again, strong move, right? That's the key. This is not a lazy move higher. This is a blow your hair back. Bears are getting out. Buyers are aggressive. This is a very strong, again, you're going to feel it, right? When it starts moving higher, it's going to really jump. Now, when that jump happens, now all of a sudden, this failure doesn't become a very reliable trade anymore. Do you see the very small but significant difference? You have to know when the market turns bullish. Because when the market turns bullish, now this failure pattern is no longer an option. You're going to have to wait for a more reliable trade, right? Remember, we're not going for the fast money. We're going for that slow, steady paycheck strategy, right? That's what I'm looking for. And so I want that, right? I want that collapse to happen now on strength, right? Show me some good strength. You'll feel it, right? You'll feel the buyers will, it's almost like the buyers will have slipped on a banana peel, right? Like one of those old, Looney Tunes cartoons, right? You'll feel like, the Roadrunner kind of slips on the banana peel, right? And whoops, and it kind of tumbles back down again. Do not sell low right there. You stay patient, right? Slow and steady wins this race, and sell off that moving average off the pullback, right, for that move going back down to retest that low. So that should give you a pretty good set of ammunition there for tomorrow, right? Now all we need is to see what happens next. And don't forget, 8 o'clock Eastern time, we're going to do this together in our trade room like we do every morning with all of our clients here at School of Trade. All right, let's see if we can ruffle some feathers here on the yellow metal. Gold is range bound and trading below the range with a crystal clear pendulum swing coming, off that high. Yes, this move lower is very strong for the bears, but it's easy to see they haven't been successful breaking to a new low. I mean, heck, this thing was going lower at 8 o'clock Eastern time. Look at the timestamp at the bottom of that chart. This was 8 a.m. Eastern time, and you're telling me, gold, that the entire day today you couldn't make another leg lower? I call hogwash on that one. It's easy to see we're bearish, right? Strong move going lower, but completely failing to make any new lower lows. And that tells me that momentum is drying up, or possibly already dried up, and we're ready to go back to the high of that range tomorrow morning. The key at this point is to get the momentum moving back in the right direction. It's a little bit too strong to the downside right now. This is exactly the same thing we saw on oil. The difference is that on oil, we didn't have this clear low of the channel. On oil, we didn't have this beautiful reversal line, which is ultimately now a triple bottom at that 43.4, right? The key is that we're at an obvious level of support here. Now we're waiting to see if these buyers can actually show up and do the job here. And to be, between you and me and the rest of the YouTube world, right? It's probably not going to be the buyers. It's probably going to be the sellers that get out of positions that will end up sending this price higher, right? Because that big drop down, I would imagine a lot of sellers got roped into that, and they're holding positions open right now, trying for that next leg lower. They may be successful. Let's be very, very honest, right? This could easily go lower, and I have a plan for that I'm going to give you in a few moments here. But the reality is that pendulum swinging back and forth from that range we talked about in last night's newsletter is just way too obvious. So if we can get back above that moving average, I'm looking for a nice strong move up, and I'm looking for a buying opportunity going back up into that range, right? If price keeps going lower, which again, in all reality, it really should have. It's a very strong move down. We should be making a new lower low, and if we do make that new lower low, now I've got a hidden channel I can look for, right? And I can look for that sell up off of that high, using that prior level, right, of support as resistance. So the strategy here is pretty darn simple. And again, this all goes back to the big ticket item from last night's newsletter, and that was this trading range. If you recall in last night's newsletter, right, we talked about how that trading range, we trapped low and we're expecting price, right, back to the high. We got the back to the high. Now we're waiting for the one try, the two try. See how that two try rule sets up, and fail back down. The amount of the move higher equals the amount of the move lower, literally to the tick. It's amazing. It's uncanny how similar those moves above and below that range is. And again, I think the biggest clue is this is at 8 o'clock Eastern time. What the heck's wrong? Why didn't you get another lower low there? Right? Even the wimpiest bear market, the most weakest bear market, can at least go back and bottom it up at least a few times, right? Didn't do anything. So knowing all of this and knowing that sellers are likely in this move right now tells me that if we can get a strong move higher, those bears are going to freak out, right? They're going to get out of their positions, and I'm looking for those buying opportunities now going back up into that range. The only thing you got to be careful about is buying too high, right? So if we do happen to see, let's say it just jumps up, right? If it jumps up to the high of that range now be careful buying high and really wait to get back down to that low, right, to get that move going back up to retest the high. We have a definite target going back up to retest that 1355 area on gold, but you're going to make your money by getting in early down off of these lows. It'll be very difficult until we see more information. You know, we don't even know how the market will look up there around those highs. It may look like garbage, just like it did earlier on this week. And if that happens, I'm not going to be a buyer at that high until we see more information, right? Until we see more confirmation. In all reality, this may be a nice jump up, one try, two try, and we may be coming right back down tomorrow afternoon. Right? We might be joking about this tomorrow night in the newsletter about, look at this great pendulum swing back and forth here today. That's definitely a possibility. Okay, so watch for that tomorrow. Again, I think honestly, the easier money will be the downside. I don't know if we're going to get it or not, but you know, who cares? It doesn't really matter. We get a good plan for either way. If we see it go lower, find that hidden channel, right, and grab that, right? Grab that channel. Try to use that prior low as resistance, right, and sell that sucker back down. We have a nice big target waiting for those bears if they can get their act together here to the downside. But right now, we got to get those bears off the couch and get them to work here right now, because the buyers are going to take this back up to retest the high if they're not careful here. All right, so gold, pretty easy on the gold. You know, and again, just be careful in the middle of the range here, right? The top is resistance, the bottom is support, fade the breakouts. That's what we're trying to do here right now on gold for tomorrow. And then wrapping things up here, probably the hardest of all of the markets going into Wednesday's session is the euro. The euro is bearish with a big old flag pattern, and after trying twice, the sellers need to find a way back down to retest the lows, or this market is going to turn bullish, and it will turn bullish really quickly. The flag pattern tells me to look for selling opportunities up above the high of the channel or down below the low of the channel. But the sellers have already tried selling this market twice. So if this market can't hold the low of this channel, I assume we're going to see a lot of strength going higher as sellers start to bail on any open positions they have outstanding. My plan now is to look for selling opportunities using the low of this channel as resistance. If price pushes lower, I don't want to sell into the low, so I'm looking to focus on traps. If the bulls can take control on strength, the keyword is strength going higher, the plan is to use a hidden channel to buy the pullbacks on the way back up to retest Monday's high. So a little bit tricky. And I'm telling you right now, this will, well, in my experience, this will be, there are ultimately two really difficult scenarios to trade. One is a runaway market. Runaway markets are very challenging for experienced traders because they require you to break all the rules. Okay, and we'll talk about that in a different day. The second scenario is really difficult is flag patterns, right? These are, in my experience, and I've had over 3,000 graduates from the School of Trade, over 10 years, over 500 weeks in my trade room. That's right, check around. I've been doing this longer than pretty much anybody else on the planet from what I can tell, right? Maybe you can correct me. Is somebody out there running a trade longer than I have? I haven't seen it. But over the last 10 years of working with countless thousands of traders, right, I've seen these be the most difficult scenarios for new traders to really master. Runaway markets, which just, they abandon all rules, right? They require you to put on a more aggressive helmet to go to work that day. But flag patterns, because when a market is a flag, what happens is it gives you a strong move down, but when it tries to retest the low, it fails. And then it goes higher and tries again and fails there. Now that creates a rising support trend line, and that rising support trend line just wreaks havoc with the sellers in the market. At the same time, though, it's not a bull market yet. We haven't seen that strength, pullback strength, right? We haven't seen the bulls actually take control of this market yet. So it's a bear market with a bull channel. I know that seems counterintuitive, right? But that's the reality. If you understand that when we see a strong move down, right, it's not a bull market just because we failed to retest the low. It's potentially going to be a bull market, but the bulls still have to take the ball and run with it. So there are ultimately two ways to trade this market. One is up above the channel high. The second one is down below the channel low. Let's talk about those both here, and then you'll see how it works out on the chart. The one that really takes the guts, the one that really takes, and I find to be the easiest, but a lot of new traders find this one to be the most difficult, and that is getting up and overshoot of that channel and then watching for that failure back down. The reason why this is so important to trade like this is because you're not trying to force the market into that rising support. Trust me, if that rising support wasn't a big deal, we'd already be down to those lows, right? It's a big stinking deal, right? This rising support trend line. The other option, this is where it takes, right? This is where it takes a little bit of patience. It first starts with strength. You want to see the market go lower, right? But you don't want to sell down here because you're selling too low, right? You don't want to sell at support. You want to sell at resistance. So where is resistance? Resistance comes into the low of that channel. So strong move down, right? Back up and go from there. Now, just a heads up on this. These types of patterns oftentimes fail. And we end up getting kind of sucked back up into that channel and bam, we're gone. Right? So that's why I say the easier one is usually off the highs. The harder one requires a little bit more patience because you first got to get that strong move down, right? Get those bears excited, but don't take the bait, right? Don't get selling at that low. Wait for that back down. We go from there. And again, right, be very careful if this market gets sucked back into that low and it's gone from there. Right? Because a lot of times the sellers who try to sell this move lower, they're trapped, right? And the only way to get out is to be a buyer. And once they start buying, the market now gets flooded with buy orders. Buyers are buying, sellers are buying, and it's gone, right? And so this is the kind of the cat and mouse game we have, right, on a flag. So here's that move down, right? Here's that move down. We go back to the moving average. Bears try once. Right? You'll notice, though, when the bears failed to retest that high, you'll notice we don't just skyscrape, right? We don't run higher, do we? No, we don't. Right? In fact, look at the wicks up here. You can see the bears are waiting up here to sell it again. They try once. Now they're trying twice, right? Well, now we're seeing some strength below that channel. And this is where I want to start keeping my eyes open for levels of resistance and ultimately look for that move up, failure at the moving average, right, strength, and then back down we go. I'm going to be looking for that trap high or that failure back below the moving average, right, for that move going back down. It all starts up at resistance. Now, how do we turn bullish? We turn bullish with strength, which will likely be a very strong move, pullback, and strength. If that happens, take out your drawing tool, mark up that high, mark up that low, find that new channel, right? Stay patient and buy off of that low. There's a big juicy target waiting up there at that prior month open, right? So again, two options right now to be a seller on a flag. I don't think we're going to be able to sell above that high because by the time we get up there, this will be two try rule failure. This will likely be a bull market if we get back to the high of that channel again. So what I want to see is I want to see the underbelly of this channel. I love this little trap high right there. I want to see it go up. Buyers now try to buy it. They fail. That's a trap into a failure, into strength, into a pullback, right? That will be a beautiful scenario there, right, for the bears. But remember, it all starts with one thing. It starts with buyers failing above that moving average. Now, what if price goes lower? Well, if price goes lower, now this becomes a relatively easy job here, right? I want to see us go through on strength. That's a horrible drawing job, Joe. Channel your Bob Ross, Joe. And then we'll look for that move going back down from there, right? So if we do see that strong move down, don't sell into it, right? Wait for that pullback and then look for the move back down, right, to retest that low. And you get that prior week close, Monday's lows, all waiting down there with that 24, right, 400. And again, if we do see it go higher here, wait for the pullback, make sure you get it, and then find that new channel, buy that channel low, right? Stay patient for the reversal, right? Remember, it's not the fast, easy money we want, right? That's not reliable. It's that slow and steady paycheck, and that comes by following whoever has control of this market. Last but not least here, guys, don't forget, I teach all of this. I teach all of this every day in my trade room. I know you guys want to be successful. You wouldn't be hanging around with me this late in this almost 50-minute long newsletter. I know you want to make this a reality. I know you're dedicated because you're still here with me right now. The first step in getting yourself on the right track is join that free trial here on the homepage at schooloftrade.com, because I'm going to teach you all about what it means to be a client here at School of Trade. You'll learn the analysis techniques. You'll learn the setups we use. I'll shoot you an invite to come out and join me as a guest in the trade room. While you're here, don't forget, you can always call me anytime at that toll-free number right next to my ugly mug on the homepage video, or check out the beginner, intermediate, advanced classes, right? You can learn more about those on our website. And don't forget, I'm always here to answer all of your questions 24/7, 365. Boy, that was a long video tonight. I apologize for taking up so much of your valuable time, but if you're still with me, I know that you love this stuff, and I'm working hard out there, so it's great to be here, rolling up my sleeves and working hard with you. Don't forget, we'll be back here tomorrow morning, 8 o'clock Eastern Time in our trade room. I look forward to seeing you there with all of our advanced members. If I don't see you guys tomorrow morning, come back and see me again tomorrow night, right? We'll tell some corny jokes. We'll put the plan together for Thursday's session, and we'll see you guys same time, same place on the next newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos.